Hey everyone, it's Aisha, and once again, welcome back to my channel. So right now across the country, interest rates are at a record low, but supply for houses is also very low. This means that people who are looking for a house and can afford it because of these low interest rates are having a hard time finding a home that fits them. And even if you are able to find a house, you are faced with another important question, and that is, how much do I actually put down on this house? Nowadays, there are so many down payment assistance programs that can help you get a house with putting only a little bit of money down, but it's important to figure out for yourself if this is the right path for you. Knowing how much you want to put down will affect your mortgage, which affects your monthly payment, and it also affects how much home you can buy. So how do you know for yourself what is the right thing to do? Well, today I'll walk you through a couple of ways that you can figure out what motivates you and what plan is best for you in terms of putting money down on a home. We will walk through key decisions you'll have to make as a home buyer, and this will help you decide how much money you should actually put down on the home of your dreams. This video will help you whether you are a home buyer looking for a starter home, a dream home, or you're an investor looking for a property to invest in. We will walk through key decisions that you have to make as a home buyer, regardless if you're buying it for yourself or you're looking to invest, and this will actually help you decide how much you should put down on that home. And as always, if you like the content that I put out, please hit the like button as it helps how this video performs, as well as my channel, and being a small YouTuber, it would be greatly appreciated. I think that's pretty easy to remember, right? Like the content, like the video, like it goes hand in hand. But with that to the side, let's jump right into some of these key decisions you have to make to decide how much money you should put down on your home. Everyone has different goals when they're going to buy a property, whether to use it for a home or to use it for an investment property. So it's very important to figure out exactly what your goals are. And in my head, I've personally broken it down into two easy ways of thinking about it. And one is being cash flow motivated and one is being title motivated. In this video, we will walk through ways to figure out if you're cash flow motivated or if you're title motivated, and this in turn will help you figure out what your goals are and how much money you should put down on that home. You still with me here? Okay, so let's jump right into the first motivator, and that is being title motivated. When I say title motivated, what I mean is that at the end of the day, your biggest goal and the thing you want most is to just own the property. You really just want that title or that deed to the home, which means that you're willing to finance more in order to own that property. And if you're an investor, if you really think about it, that's really the idea behind house hacking. House hacking is a way for people who don't have a lot of cash to put down on a property, for them to still be able to get into a multi-family property and put only a small amount down. This helps real estate investors really kickstart their investment portfolio, and they don't need tens of thousands or hundreds of thousands of dollars at one time to put down on a property. Because let's face it, it's really hard to come by people who have that much cash on hand at one time. And by that I mean, I know there's a lot of people who have a lot of money in this world, but you know, the everyday investor, people who are just starting getting into investing, or who really know their stuff but just don't have the money, like it's not an everyday situation for the average American. You know, average American median household income is like $80,000. They don't have $200,000 in cash in the bank just sitting around. But before we get off track, being title motivated can also be something that you are if you're looking for a home just for yourself and you're not really looking to make it an investment property. Buyers who are seeking a home to live in can use programs like FHA or other down payment assistance programs to really help them finance a home without putting down the traditional 20%. This allows people to get the home that they really love without, again, spending tens of thousands or hundreds of thousands of dollars on a down payment. Being title motivated as an investor or as a home buyer for yourself really seems, like the life. It seems like super easy peasy, but you have to remember that there are drawbacks to each side. Putting down less money into a down payment means that you will then have to finance more, which means that you now have a higher monthly payment. You also will have more fees, and that comes in the way of mortgage insurance. Mortgage insurance is something that lenders build in to protect themselves from a risky investment. So if you're not putting down 20%, that means you're financing more, which means you have less of a chance to fully pay that off. You just are taking on more of a burden than people who put more of a down payment on. So lenders want to protect themselves from a risky investment, that is you, so they will tack on an extra fee known as mortgage insurance to help protect them. Mortgage insurance is prevalent whether you're using, a private mortgage or if you're using a government-backed mortgage like FHA, so there's not really any way you can avoid it if you're putting down less than 20%. And mortgage insurance usually runs the cost of 0.25% to 2% of what your mortgage is. So just keep that in mind when you're looking for a home, that will be an extra fee that you will have to pay if you're looking to use a down payment assistance program. Okay, so that is in a nutshell what being title motivated is. So what is being cash flow motivated? Cash flow motivated is exactly what it sounds like. It means that you're looking for more of a return per month. You're looking for as much cash flow monthly as possible. And this is super important if you're purchasing the property to be an investment property. If you're cash flow motivated, it makes sense that you put down a higher down payment because you're financing less. That means your loan is less, and so your monthly payment in turn is less. It also means that you're more likely to be avoiding those fees like mortgage insurance because you're putting down at least 20%. You're less risky, and then you have that down payment as kind of security for the lender so that they feel safe not adding that extra fee on. So as you can see, it's really hard to make the decision of how much you want to put down on a house until you figure out what is really driving you. You really have to know exactly what your goals are. Are you a person who's just ready to own the property, whether personal or an investment property, and that means that you're willing to put up with higher fees and a higher monthly payment? Or are you someone who's willing to buy a little less house if it means that you cash flow more per month and you save money in fees? And as much as I try to give you all the information I can, I cannot make that decision for you. It really has to be a decision you make for yourself. With that being said, I hope that this information was helpful for you. I hope it helps you figure out what your internal motivations are, what you really want to do when you buy that property, and what your goals are for your home. If you're looking to be a home buyer and you're also trying to figure out whether it makes sense to pay cash for a property or finance, I actually have a video linked in the description below for you to check out. It is a new year and everyone has new hopes and new goals, and I pray that we all accomplish all of our goals this year. So with that, I'll say thank you guys for watching. I really appreciate everyone who tunes in and supports my videos, so thank you so much.